So rules of thumb, which ones should you ignore? Which should you explore? One you hear all the time is you should take your age and subtract it from 100. So like, let's say you're 50 years old, you take 100 minus 50, so you should then have 50% in the stock market and 50% in safe investments. Joe, I'm going to say this is one of the worst rules of thumb I think I've ever seen.
In my opinion, it's the stupidest thing ever. If this is from insurance salespeople that they came up with this, to say, all right, well, you're in your 30s, you need 30% fixed income, 70% in the market, and this 30% I'm going to sell you, a fixed annuity. Oh, in your 40s and 50s, right? It was just kind of a sales ploy. You have to take a look at, what target rate of return do you need to generate? I have no idea if you're in your 50s and 50s, should you have 50-50? Maybe you should have 20% equities and the rest in fixed income. It's all dependent on everything else in your life, right? What is your appetite for risk? What target rate of return do you need to generate, right? What is the income demand for the portfolio? What's your tax bracket, and so on and so forth?
Yeah, I mean, and I guess because now people are living longer, I guess it was the insurance industry, as you said, Joe. So now it's like, well, now let's take 120. Let's take 120 minus your age. Maybe that's the number. And none of these things really apply because every person's situation is different. We know people in their 80s that should have 100% in the stock market because it's all for their grandchildren, right? And so it's different. So you take 100 minus their age, 20% only in the stock market. Makes no sense whatsoever.
But here's the problem with our industry, Al, is that it's boring. It's complicated, right? And then people don't want to do the research. And then they look and say, oh, I heard this. Take my age minus 100 and call it good or whatever. And so at least, if you're in your 40s, 60-40 split, I don't know. I'm in my 40s. I don't have a 60-40 split. I have 100% stock.
Oh, it's because you forgot the rule.
I did. I need to go back. I'm a certified financial planner. I should scrap that schooling and just do this. We're good.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.